Hi, this is Seth David from the world famous Nerd Enterprises Incorporated, bringing to you another special screencast. This time we're going to be talking about journal entries, how to keep your diary in QuickBooks. No, I'm just kidding. Journal entries, of course, are not a way of keeping your diary in QuickBooks, although I'm sure that would be much more exciting than what we've got to offer you today. Journal entries are the way that transactions really get entered in QuickBooks. Even though when you're posting transactions, you're probably used to using a form like a check or a bill or an invoice. Every time you hit save and close on one of those transactions, what's really happening is a journal entry is getting posted. So I'm going to show you, I'm going to give you a little bit of a tour into what that looks like. But first, if you like this kind of topic and if you are hungry for more knowledge around journal entries and the core bookkeeping knowledge of debits and credits and how to get things onto a financial statement without using the forms so that you have a better understanding of what's going on when you do use the forms, then you want to come over to my website here, click on training, and come down here and click on the School of Bookkeeping. The School of Bookkeeping is a magical place which will teach you about all of these things and so much more. The first chapter will, of course, walk you through exactly what I'm talking about, the basic debits and credits of bookkeeping, Introduction to Bookkeeping, Chapter 1, Section 2, normal balances. We'll talk about what increases an asset account, what increases a liability account, and the same goes for equity, revenue, and expenses. Then we'll get you into an introduction to QuickBooks. We'll talk about your chart of accounts, what you do for a living, your customers, your item list rather, who will you sell to, your customers, the people you have to pay, your vendors, the revenue cycle, how to actually make money and bring it in QuickBooks, booking your expenses, what to do about NSF checks, selling products, got a whole chapter here on inventory, a whole chapter dedicated to reports and everything you need to know about that, and a special chapter on how to enter payroll, since so many people get that so wrong. I show you how to do it right. But now, let's look at the content at hand. So like I said, whether you're writing a check, entering a bill, recording an invoice, or a deposit, all of these transactions really have in back of them a journal entry. And so I want to show you what it looks like in both cases. And the way we do that is I've set up classes here, one for the journal entry, one for the form. This way you can see exactly what you can see the impact in terms of the fact that it's the same thing on paper. By on paper, I mean when you show the report, it's going to look the same. The only difference is how it gets to the profit and loss. And at the end of the day, as I've said in many, many previous recordings, when I'm entering transactions in QuickBooks or any accounting software for that matter, it's really the whole purpose of putting all this information into it, not into it, but into it, is to get information out of it. And the way I get information out of it is on the reports. So I always stress that I think it's important to understand what's going on behind these forms, because you'll have a better understanding of what to do when it comes to, let's say, a tricky transaction. And you don't necessarily know how to book it in terms of these forms, but if you know what it's supposed to look like on the profit and loss, or the balance sheet for that matter, then you can start thinking through, okay, what do I have to do with these forms in order to get it there? So let's close all my screens and start over. So let's take a simple check, for example. And I'm going to run this profit and loss by class. I should also run a balance sheet, just for good measure. So we'll run a standard balance sheet here. And we'll have these kind of up here the whole time. Let me just move these over. You can actually tile them vertically. Okay, so first things first. I write a check. Very simple. Let's write a check to Nerd Enterprises. Add them quickly. $1,000. Professional fees. Now, of course, when I save this, two things are going to happen. I'm going to end up with a negative balance in my bank account, and I'm going to end up with a positive expense in the form of professional fees, right? Because it's coming out of the bank account here. It's going into the expense account, professional fees. We're going to assign the class form. That way it shows up in the form column under the profit and loss by class. When I hit save and close, sure enough, after I agree to always refresh reports, it's exactly as I predicted. Notice I've got now a column for the form on the profit and loss by class, $1,000. Balance sheet shows my negative $1,000 balance. Let's say I want to do this by journal entry. Very simple. I open up a journal entry screen, And here's where your debits and credits knowledge has to come in. I want to write a check using a journal entry. Well, the debit is going to increase an expense account, right? So we want to do professional fees, 1,000. Over here we'll do the checking account. That gets the credit because credits reduce assets. The $1,000 comes out of the bank account. Let's put in the class now. The class is really most important for the expense side, and the class on this is going to be journal entry. Okay, this way it becomes very clear. When I hit save and close, we're going to get the same thing. We're going to actually double the negative balance in the bank account. We're going to double the professional fees expense in total, but you'll see it broken out by class. By class. There it is. See? It's like magic. It's like magic. See? The journal entry does the exact same thing. See if I can total this by class. Didn't think so. So, let's take a look at an invoice. Now, an invoice is a little trickier in some cases, especially if I'm selling inventory, because there's often a couple of accounts that are being debited and or credited. So let's invoice always write incorporated. We'll invoice them for some service. Okay, and we'll invoice them let's do $1,500 so we can show a profit. Profits are good. So here's the form version of recording. What are we recording here? We're recording income, right? Because I'm charging somebody for a service, and I'm about to increase my accounts receivable. So another transaction that's going to affect both profit and loss and balance sheet. I'm going to see $1,500 come into the balance sheet on accounts receivable, and I'm going to see $1,500 show up as income on my profit and loss by class because this is on an accrual basis, which means even though it hasn't been paid yet, it still gets regarded as income. Save and close. Save anyway. As I predicted, I forgot to classify this. Bad me. Let's classify it. Let's put it into the class of form. Do it in both places just to be certain. And so now we have the form, $1,500, right? Expense is still there, of course. Like I said, the $1,500 would come in as accounts receivable. Now let's do it through a journal entry. General journal. Okay. Now we're increasing accounts receivable. That gets a debit, $1,500. We are also increasing income. So we need an income account here, accounting services, right? Now we also need a name to associate it with. We have to tell QuickBooks whose receivables this is and whose income this is. So I put my name, and my class is going to be journal entry. Okay. Save and close. This gets updated. Now I have my income in the journal entry column as well. Of course, the total is now doubled. Accounts receivable is now twice what it was because I've got both of these in there. So now you can start to see that journal entry, form, it's the same thing. The form is really producing a journal entry in the background. The software is just making it easier for you to work with because you may not be an accountant, so you may not need to or really even want to think through what's a debit, what's a credit. However, if you're doing this for a living, or if you're running your own QuickBooks file for your own company, it's probably a good idea to become familiar with this, which is exactly why I again stress that if you want to learn more about this, you should definitely sign up for my School of Bookkeeping. Get started today. You will learn a ton of useful information. You will increase useful abilities that you can put into practice today. As always, if you have any questions, post them in the comments box down below, whether it's on the video directly or in the blog, wherever you happen to be watching this. In the meantime, I hope you are having an absolutely spectacular day, and I look forward to seeing you on the web.